Hello traders, how is it going? So we have US market finally recovering after that horrible first week. So now that we are in the second week, we are seeing some kind of like a light towards the end of the tunnel, something like that. But a lot of counters are at their support level, and it does seem that most of the US counter, they are very well supported. So because of that, today I have three counters for you that are a very good choice for trading and also for long-term investing, however you want to play it. So I'm going to go through this counter within this session. But one thing to note is that these three counters, right, for whatever reason, they generally do not appear on our US stock scanner. I mean, I know the reason why, because I know what are the parameters behind my scanner, but for some reason, they just generally don't appear. But that does not mean that they are not good for trading, because the purpose of the scanner is not a trade entry criteria itself, but it does quite a pretty good job of filtering all the counters, but it is not perfect. So it does miss a few things here and there. And unfortunately, these three counters that I'm going to share, it does miss them quite often. So for most of the US stuff, I do have to manually look through the market from time to time, because it is such a huge market. It's almost next to impossible to optimize the scanner to catch everything, just to put it simply. Okay, so the three counters that I am talking about today is Microsoft, Apple, and Google. Oh crap, I showed the chart in the wrong order, but never mind. Okay, I apologize with my voice. I just recover from my COVID booster jab. It was horrible. It was very horrible. Okay, so looking at these three counter, right? Let's look at Microsoft. We do have some kind of price showing that it is being supported. Then we have Google, also have a good sign of price being supported. And of course, also Apple, it does show signs of buyers coming in and the price being supported. And because these three counter don't shows up on my scanner, right, as mentioned just now, I'm just going to roughly give you like a green light. You can go ahead with it if you want to trade it, but I'm going to share the stop loss and the TP level that you should aim for. Okay, so first thing first, if you look at this tree chart, right, Google and Apple, both of them seems to be similar in terms of a chart structure. So let me explain to you what I mean by that is that if you look at Apple, it has a high here, so somewhat creating like a resistance level, and it has a bottom here, somewhat creating like a support level. Okay, so so this is very funny for the chart pattern people. Do you short the double top or do you long the double bottom? Which which one are you going to do? which position are you going to take? Like the double bottom, double top. I mean, just kidding lah. We are definitely not going to short this counter. We are not barbarians. We are disciplined traders. Okay, we are disciplined traders. So first, even though we have a good sign of a even though we have a good sign of a double bottom for Apple or a support level here, this is, I would say, is a little bit premature, because price can actually come down like this, and this is no longer a double bottom anymore, because okay, we have that first green candle yesterday, on 2 days ago, then we have another green candle yesterday, and this two candle alone, it does not represent that this level is a established support yet, because it can actually come down and what you will end up is no, it's not even a double bottom lah. Okay, so we have to be very careful. We have to be very careful when we are trying to assume if certain level are support or have they been established yet, that kind of thing. Okay, so when looking at Apple, I don't really want to use these two level as my trade setup criteria lah, but rather I will want to look at this level here, this level here. So if you look at it in a like the wave format, right, what we have is that we have like 1, 2, 3, 4, then we have 5, 6, then now it's like something like that. Okay, so I want to use this point here. I want to this point here. So this is not Elliott wave or whatever. This is just looking at higher high and lower low. Okay. Okay, it's as simple as that. So I do want to be safe and use this level here, because if you notice how sometimes the chart move, right, it is not as simple. For example, in this point here, you might think that you have a double bottom, then triple bottom, but price does go back down below this and then start to go back up. So if your stop loss is like here, you can definitely get whipped out here, and then the price will rally without you. And it can be quite possible for here also, in a sense that price can go like that, like that, like that, and then it just go down, then just rally all the way up. This is a very possible scenario. Okay, so instead of using these 2 points, and in fact this last point as mentioned is not even established yet, so I want to use this level here, this particular level here. Okay, so I'm gonna like draw one line across 160 maybe. Then when I'm doing a stop loss level, I don't want my stop loss to like cutting through this whole cluster of candle. So what I will prefer is maybe I just want to leave a little bit of breathing room. So you will realize that in most of my trade setup, I am very generous with my stop loss, because I can simply adjust my lot sizing to determine my risk, to take care of my risk. The stop loss, wherever the stop loss is, it doesn't matter. Okay, so I mean, it doesn't matter in the sense that you have to be reasonable lah. Of course, I cannot have a stop loss all the way like down here, and then you probably will not be able to enter much position. Okay, so here, this level here is a little bit too risky, so I'll probably encourage somewhere about 155. I'll probably encourage 155 as a stop loss level. And then for your TP, right? Now, here's the thing about buying a long-term counter. You don't really need to worry about TP, because price will go sideways, come down, but eventually when it continues to go uptrend, right, the time is not against you. So if I hope you guys already watched the previous video where I mentioned about whether you should short the you should short the lower high or long the higher low, right? I do mention this criteria about the time. So if you place a long position here, right, time is not against you. In fact, time is helping you. You can just hold this thing forever, and then the primary uptrend will just take it up. You don't have to be very accurate in terms of your exit price, because it will keep going up and up until the long-term uptrend is broken. But if that long-term uptrend is broken, then you're probably like out of the trade anyway, or let's say if the price go up until like maybe 260 and then it broke the uptrend, right? Then you can keep shifting your stop loss to like lock some of your profit there. So that is mainly how Nimbus Capital take care of profit level. We keep shifting our stop loss, but of course, how exactly do we shift stop loss is for our course training only. But for Patreon, right, we do provide a reasonable TP level 1 and TP level 2 so that you can kind of like roughly gauge lah. Okay, but the important thing is time is not against you, so you don't have to rush. If you are in the profit, right, you just be patient, hold on to it, like just shift your stop loss here and there, and then you will be fine. Okay, so now let's plot some of the level. So stop loss for this, right, I think 155 would be a very nice stop loss level. And then of course for TP, right? We definitely cannot have our TP here. So resistance level are not for you to put your TP, okay? No, no, please. This range is like 7% only. You cannot play this range, okay? You cannot play this range. If you are playing this range, it's either you are like on a very big CFD account, or you are scalping, or you are trading on 50-minute, or you don't know what you are doing. So it's not recommended, okay? It's not recommended. So because our stop loss is at 155, we obviously want our TP level to have like good amount of profit lah. And most of the time, right, we are able to hit that profit level anyway, simply because time is not against us. We can hold. Holding power is important for trading also. So in this case, right, I will probably place my TP level somewhere around maybe 200. This would be my first TP level. And then the second TP level can be like maybe 210 like that. So I think these are good level for this particular trade setup. Okay, so this is the first trade setup for Apple. But please do take note, we have a active trade on Apple way back here. Okay, we have an active trade from Apple way back here, and our TP level is at 190. So for those who are holding that first Apple trade, right, please do not double down. Please do not double down on this. Okay, so maybe when the price reach 190, then you might want to like relook at your trade, but do not double down. Very important, very important. Yes, everything is good, recovering, but no one knows what can happen. So do not double down. Okay, so with that out of the way, let's look at Google. So the reason why I say Apple and Google are somewhat similar is because both of them is like the double bottom, double top lah, that chart. Okay, so in this case, once again, we are not going to short Google. That's the last thing you want to do. That's the last thing you want to do. So we want to go long, but unlike Apple, right, you can see that for Google, this range is quite big. This range is actually quite big. It's like about 12%, where Apple is like about 7%. So so now given this range that we have here, right, and it does seems like both here and here is like somewhat established already. But once again, we do have to take note that this one can simply just go down some more, and then this is no longer your double bottom already. So we must account for that also. Maybe we can use this level here, this level here, this particular level here. Okay, this level here. So we can use 2004, maybe 2004 might be a better. Let's measure. Okay, slightly better. Okay, so we can actually use 2004 or maybe 2450 lah, 2450. The key thing is we definitely want to be below this 2 point. That's that, and also below this gap. So that's the key thing lah. But we also do not want to be like just like on the dot there, because price can do this and then go up, and we can get caught here lah. Okay, so I'm thinking maybe, let's see, 2450 might be good. Yes, 2450 should be quite okay. Excuse me. So yes, 2450 should be quite okay. And of course, once again, right, we cannot put our TP level at the resistance. But in fact, if you want to put your TP level here, right, it is quite okay. I believe it is acceptable. So for example, if the price come here and then you scared, you want to run first, right? Up to you, because there can be a situation where the price hit here and then come down and it just goes sideways. Although it doesn't hit the stop loss, right, it will just sideways, and then at least you got your money out and then your money is in some other counter. I don't know lah. So this one is totally up to you. So personally, I will think 3002 will be a good TP level. 3002 will be a good TP level. So once again, right, this is exactly the same as Apple or every other long-term uptrend counters. Time is not against you. As long as your stop loss is not hit, right? Time is always on your side. You can afford to hold, and you can keep like holding until as long as the counter takes you lah, and you just shift your stop loss strategically. Okay, the keyword is strategically, not anyhow suka shift. Okay, so you can make your trade setup something like this. Perhaps your first TP level will be here. For those folks who really like anal about risk reward ratio, and then you want to put your stop loss here, right? This one you do at your own risk. Okay, you do at your own risk. I'm personally not anal about my risk reward ratio. In fact, I have explained many times that risk reward ratio is not everything. Okay, in fact, a lot of people do this kind of thing in order to get a so-called risk reward ratio, and then end up losing a lot of money where they could have been profited if they just shift their stop loss a little bit lower. Okay, so this one up to you guys. If I am trading this, I'll definitely put my stop loss at 2400. Nowhere higher, 2400. Then I will probably put my TP at somewhere around this level. Okay, so you can enter at the current price if you wish. I think this counter is quite good for a recovery right now. So yeah, so that's for Google. Next, let's look at Microsoft. So Microsoft is slightly different from Apple and Alphabet, mainly because we don't have a so-called double bottom, but in fact we have a triple top or triple bottom. So like you want to short here, like those shorty can decide to short here. I don't know, but once again, right, we are not going to short. We are not going to short this kind of very strong uptrend. We don't want time to be against us. We want time to help us. Okay, so in this case, right, because we do not have any kind of double bottom or triple bottom to help us like find a proper level, right? What we can do is we can actually look at the previous support level, which is like right here. Okay, because now that price already retraced quite a bit, right? So when price retrace, what is it trying to do? For this stock to remain in an uptrend, it has to create a higher low. So price is finding a higher low. So a higher low will be any low that is beyond this point. So it can turn here, it can turn here, it can turn here, it can turn here. As long as it is above this low here, this counter is still in an uptrend. But if it break this low, right, then it is no longer a higher low. It is probably going to go downtrend, and that is where we want to be out of the trade. That is where we want to exit the trade. That's why your stop loss always need to account for the chart structure. It is not like, oh, I can lose $200, so I place my stop loss there. No, how much you lose does not dictate where your stop loss is. You can find a stop loss first and then adjust your lot sizing to plan out your risk management. Okay, so the flow is different. So for Microsoft, right, definitely below this level. So I will probably go for like maybe 270. 270 is a good level. And then you can like enter here. You can enter at the current price. Once again, right, this one confirm guarantee chop, not established. Of course, if it goes up, then good lah. Then of course is good for us lah. But you have to account for the fact that it can just come down like this also. So we are waiting for that. So because of that, right, there are several ways you can enter. Number one is you enter at the current price. The advantage is, of course, you get to go in lah. You get to buy at the current price. But you can also place your buy at a lower price level. If you place your buy order at lower price level, right? The disadvantage is, of course, maybe price won't come down really. Price just recover from here, and then you might not get the trade ready. Okay. But if you are trying to buy at the lower level, right, do not buy when the price is going down, okay? Buy when the price is U-turning back up, meaning wait for green candles. You don't buy at the red candles, but you buy at the green candles, okay? So this one, I will totally leave it up to you. I can only hold your hand until so much. Beyond that, right? It's like you might as well give me your money, I trade for you already, or you come to my course if you need further hand holding lah. Okay, so you can place your entry level here, or you can place your entry level maybe slightly below, or you can also go with the kind where you can place half your position here and another half here. But of course, make sure that your total risk, your total risk in this trade, right? Be it one position, one entry or two entry or whatever, right? Make sure your total risk is not more than 2% of your total capital. And then your stop loss will be here. Okay. And then your TP, once again, if you, okay, wait, let's measure, okay. So this is about 12% also. The width is the width is about 12%, and it is the same, somewhat the same as Google. I think Apple have the most tightest range lah. Apple have the most tightest range at about 8% only, whereas Google and Microsoft have a much higher range. So if for Microsoft, right, if you want to put your TP level here, right, I think that's perfectly okay. That's perfectly fine, especially if you can manage to get it at a lower price, right? That's even better lah. But judging from here, I have very little doubt that it will go lower. I don't know. The key thing is we are not here to predict. Okay, we are not here to predict. Our trade strategy should encompass all possibility and make sure that we have a plan for all possibility that it can happen. So for example, we have accounted for, if we enter here, right, we have accounted for price going like this. If we have another entry here, we have accounted for price going like this. And if price decide to break this, right, then of course we also have a plan, which is to get out of the trade lah. So we actually have accounted for all sorts of scenario already. So so we are not trying to like, oh, this one confirm bottom and then go all in and then like blow your account the next day, that kind of thing. So this is another trader's mentality that only traders will know. Those who are just like very top big or just like top only never trade, they won't know this kind of thing one. Okay. So I would not blame you if you place your TP level there, even if your stop loss is so far, right? I think it's okay. I think it's all right. Once again, the key thing here is time. Time is not against you, so you can actually afford to hold. And the next TP level, I will go as far as maybe 380. I will go as far as 380 because as long as this whole thing is creating higher lows and keep going up, right? There's actually no reason for you to just run also lah. The only reason for you to run from the trade is that it has finally broken the higher low and now it is creating lower high, that kind of thing. So until those stuff happen, right, there's typically no reason for you to exit a trade. And that is why you will see me holding a lot of position from very long time ago, even though they are so-called trading, right? I do hold position for very long because the uptrend is still there, so there's no reason to exit. I keep shifting my stop loss, and that is one of our so-called signature strategy lah, our shifting of stop loss, which is once again to repeat, is for cost training only. But nonetheless, you will definitely still be profitable if you follow all these TP level. All the statistic that we use, all the expectancy value, right? Those are assuming you exit at TP level 1. So even if you exit at TP level 1, right, at the end of the year, right, you will definitely still get that 30% return or 40% return. Those are guaranteed confirmed chop. Anything beyond that is like extra bonus. Okay, so now I have 3 setups for you: Microsoft, Google, and Apple. For Apple, if you already have an existing trade, please do not double down. And the other Microsoft and Google, right, just pick and choose. Of course, I don't recommend you going into all 3. In fact, I will say you can pick 2 out of 3 lah, but don't go or don't go YOLO into all three, okay? Because no matter what, all these trees are tech counters. So be careful, be careful, okay? Make sure your risk management is all there. So that will be all for today, and hopefully you guys will be able to get some nice entry in, and let's hope that US market continues to recover and we will be hitting a few counters profit here and there. Okay, guys, thank you very much.